All right, what's good? What's good? What's good? YouTube, good to be back for a brand new week. Excited to be here with each and every single one of you guys. And yeah, let's get straight into it, man. I know we've been on here for a couple minutes waiting to kick things off. Hope you guys enjoyed your weekend. So yeah, 2026, week 2, more or less. Pretty good start to the year so far. So let's keep it going, man. We got a lot of cool things coming up in the world of Akashics that I will tease on here in a few minutes. I mean, you're gonna see, flyers and stuff like that start, getting passed around and whatnot. But I'll give you guys a little bit of a heads up. Let me just go ahead and get in this chat on here through my phone so I can see y'all. All right, cool. All right, I see you guys in the chat. So without further ado, let's get straight into it, man. We're gonna pull up NASDAQ here. For those that might be a little bit newer, my name is Rich. I am an educator for a platform called Akashics, but I love to do these weekly market outlooks through YouTube just to, give some good free content for everybody to just kind of get an understanding a little bit of how I trade, what I look for, and what to expect for a brand new week. So that way we're able to come in and just get straight to work. So as far as what we got going on for NASDAQ right now in general, the main, outstanding thing is these highs that were formed back from basically December 5th all the way to the 11th. Okay, so we had basically formed those equal highs. We basically tested it here on Wednesday, and then we got close to it again on Friday, and then the market closed. So this area is definitely my main hotspot for activity. We're getting some rejections now to kind of open up the market, but I do expect us to go and take out these highs. And typically, whenever you run a bunch of equal highs of a month basically of price action, usually we'll get a pretty steep reaction. So I think at some point we will get some type of fall off, but more than anything, I think eventually we will get to all-time highs here on NASDAQ. I just feel like it's inevitable, to be quite honest. But this is going to be a very sensitive area of price to kick us off first that we're going to be looking at. And then depending how we react around there is kind of like the next move. So still definitely very bullish overall to take us up to those equal highs on the higher time frames. Once we hit those, I do expect some type of at least short-term reaction. And then once we kind of cross back above and break above these highs a second time around, then I think that will be the indication of a potential rally to the all-time highs. So that's kind of my macro picture in a couple seconds of what I'm seeing. As far as where we see price at right now, we just had a pretty strong open a couple minutes ago. This market outlook starts right when the market opens at 6 p.m. Eastern. So yeah, we did see already kind of a little bit of a rally that we saw a spike, nice little drop, and now we've kind of made a little bit of a recovery. So price is definitely a little bit volatile at market open. I don't usually trade Sundays though. We trade Monday through Friday for the most part. But when the market is closed for, the weekend, it usually picks up a little bit of steam right at the open. And then, yeah, that kind of leads us into the Asian range at 7 p.m. So, yeah, for the most part, I do want to see us, break all of these highs at some point. It might be tonight. I don't really know, obviously, when the market is going to do these things. But as far as the direction that we want to focus on is definitely taking us higher, at least until we take those highs and then kind of reassessing the situation. So because I trade during New York session, that movement to take us to these highs might happen during Asia. It could happen during London session. Ideally, personally, I would rather us either stall out or just continue slightly moving lower throughout now and London session and all that, because if we can get some type of reversals during New York, I would love to participate in some type of buys that take us up to here. If we do kind of take out these highs from now until New York session, then we got to kind of see how we react. But I would be leaning more towards selling off whenever we take out a major liquidity area, at least short term, and catching some type of sell off like that. So it just depends the timing, of when everything kind of takes place, how it takes place. Tomorrow will you talk about the IFVGs? Yeah, so like tomorrow, we have the session in Spanish, right? And then Tuesday, Wednesday, Thursday is when I do English. So I will talk about it on the Spanish session, and then on the English sessions on Tuesday we'll talk about it. I did a poll for the Akashex chats, this one right here. It's up to like almost 100 votes now. I'm sure people will continue to put a little bit more voting into this, but it's basically 50-50, more or less. Like, it's very close between intraday and scalping as far as like the style of trading that people want to see or like they like, as far as the community and the ones that are interacting on this. So personally, I want to be able to give people a framework for different trading styles. And I think we have something that is going to be very interesting. Now, obviously, like, the main thing I've been teaching over the past couple months has been Liberty X, which is more of like an intraday style where we're looking at anywhere from like 3 to 5 trades. I say usually it's like 3 to 7, but somewhere in that 3 to 5 ballpark is where it's kind of been for me. And so, there's people that rock with that, like they're cool with that. But there's people that do like to, scalp, or they want to be able to find more entries on a daily basis and things of that nature. And there's definitely ways to do all styles of trading. It doesn't matter if it's swing trading, intraday, scalping. There's methods to make all of those different styles work. It's just a matter of like, what somebody prefers or what they're more geared towards personality wise that they can do better. It's really a personal thing. But yeah, basically all the styles that I've taught, like even the OG Liberty stuff of Asia breakouts and fake outs and all that stuff, that had more frequency than Liberty X, but they were still more like intraday. There hasn't really been like a scalping approach. And so, yeah, there's ways that I want to introduce on the 1 minute time frame that could be very powerful ways to, scalp NASDAQ. Obviously, I personally think that newer people, like if you're not fast on the charts, like if you don't know how to set up positions quickly, if you don't understand charts to a certain extent, scalping is something that is going to be difficult for people to jump right into as far as actually executing properly. Learning wise, you can learn it, the same thing. Like, learning is not really going to change, but it's being able to execute properly that is the biggest thing. Because when you're scalping on the 1 minute, you got to be quick. Like, you got to know your lot sizes, you got to know your contract sizes. You have to be able to identify the specific criteria that I'm going to be talking about, and again, executing in the moment without hesitation. So there's those elements that people have to be very sharp at. And so that's why I've always leaned more towards like the intraday style for teaching and getting people like consistent and feeling like confident in their analysis, because they have more of the luxury to like let a setup basically present itself, prepare yourself, know like the very clear rules, all that good stuff. But yeah, I just feel like it is good for me to introduce a more like, aggressive approach, something that for people that have been, in the community for some time and they want some type of like accelerated method of trading, like it's a way, And so yeah, definitely want to introduce it more and more. It is obviously something that can get you it can get you pretty crazy trades pretty fast, but again, you have to be able to like execute properly and manage your emotions to a different level. Because when you're scalping, man, like that's the easiest way to lead to like over trading, over leveraging, making mistakes. Like the faster you're trying to go and the more trades you're trying to take, the more you open yourself up to issues if you're not experienced. You know what I mean? So I definitely want to kind of like, introduce it, and people over time I think will kind of lean towards using Liberty X more or this one more or whatever. So I can give an example of like the setups that were present from Friday. And I think NFP Friday, like usually it's a little bit it's kind of a question mark whether NFP is going to be productive price action or not. Personally, I loved it. I thought that this NFP was like the cleanest NFP that I've traded in like a really long time. A lot of NFPs I'm just kind of sitting on the sidelines, letting it wash out until Monday. I don't know, it just depends, but this one just had everything for both the scalping approach and then also even Liberty X. Like no matter which method, it was just beautiful. Like literally every method that I've taught Friday, played out as good as it could possibly play out, honestly. So I definitely will want to cover a little bit of Friday on here as well before we get up out of here. But yeah, again, for the most part, I think the source of manipulation that we saw on Friday, which is basically from 10 a.m. and then at 9:30 open, we saw those wicks to the downside that kind of ended up pushing price all the way up here. At some point we probably will want to revisit that area of manipulation down here. But overall, the main liquidity target absolutely is all the way up here. Now, I don't ever list prices because, some people have different brokers, prop firms, they trade futures, CFD. So that number is going to be a little bit different for everybody. On this specific chart that I always use as reference for the most part, which is the FXCM chart for NAS 100 or US 100 cash, this one right here. That number is somewhere in that 25,850 area, more or less. Okay. So, yeah. Now let's talk about Friday because again, I've already basically given you guys my thoughts on where we want to get to overall, which would be all the way up here above these highs. But Friday, we're gonna take it back to the 1 minute here. Okay. And I want to bring it back to, let's say, 10 a.m., right? So this is 10:01 a.m. So usually for, hold on, let me see. Did you trade Friday? No alert. Yeah, I did trade Friday. There was not a trade alert, like through the app or anything like that. But what's it called? Usually I do communicate a little bit more closely. Like if I don't send an alert, I'm always usually talking in the Akashic's funded chat that I have, right? So we have this funded focus group thing that we created back in October, and usually we have more conversation on here because on the Akashic's official chats, like I'll post announcements and polls and recaps and things like that on here. But when you open up the topics on here, I have to like close them and stuff like that. So I don't know. I usually speak more on the funded focus group part, and we were talking about these entries here. So I want to show you guys this one. Where was a little bit higher here? Okay, so I say, hey guys, I still think this is the objective, and that was to basically clear those same equal highs that I was telling you guys about. And then I was like saying, okay, here we go. If we can take Asia low and then start inversing 1 minute fair value gaps, I could see some buys. Okay, so that's like how I try to communicate in these chats. Now for that specific setup, which I'll show you, that's where I started taking these entries right here on some Top Step accounts. So I do want to, that's why I want to talk about that. And then the Liberty X stuff was the entries that were a little bit higher. So I'm going to show both those examples because I want to try to start from the perspective now of like being able to show people like, hey, if you trade this strategy, this is what happened. If you had this strategy, then this is what happened. And then kind of taking it from there. Is there a link to that chat? If you can message me on Telegram, I'll send it through there. I don't think it's gonna let me put it on here. My Telegram, I might be able to add you though, low key. Let me see. I'm gonna add you. You're good. You'll see it now. All right. Okay. Okay, so we're gonna start with what's already been taught. And by the way, you'll see it in the back office, like basically ASAP. But I finally finished and edited the Liberty X strategy video. It's about an hour long. And this is gonna go on the Akashic's official back office for my educator training series that shows like this strategy. So I know I've been teaching it like on the live sessions and everything like that, but we haven't had it officially on the Akashic's website. So once you guys log in here, it's not gonna show it like right now, but sometime very, very soon this week, hopefully like tomorrow, it could be on there. I just don't wanna like say it's gonna be there this fast because it's not me that puts it on the website. I have to have the tech people go and insert the video. So, you know, I don't know how much of a turnaround time that is, but like there's this video here, it's called Liberty Strategy, but it's gonna be like replacing this video. It'll say Liberty X. So it'll be in my educator training series here. This video that I'm talking about. So I have the file right here. I just gotta upload it to the tech team and then they'll put it in the back office here. So that was a little bit overdue, but I think it was good that I waited a while to do it and kind of solidify all the stuff that I wanted to, you know, practice in real time with you guys before introducing it to the community, like super officially. So, okay. So let's start with that setup. So this is the same thing I always do every time with this. I have the confirmation checklist right here. So the first thing we look at is what was the 10 a.m. or I'm sorry, the 6 a.m. candle. The 6 a.m. 4-hour candle, was it bullish or was it bearish? Okay. So these are all things that I teach in that video that you guys are going to see. And I also teach it on my live sessions all the time. So I'm not going to go into it too deep here. But yeah, long story short, what we're looking for is from 6 a.m. to 10 a.m., that 4-hour candle, does it close bullish or bearish? Now, this was more of a doji candle, meaning that it had like a very small body and it had a like really long wicks on both sides, right? So you can see long wick to the downside, long wick to the upside, and then a small body. But even then, it still technically closed bullish. And honestly, overall, I still had a bullish mindset to really get to these equal highs that were up here anyways. So my mind was already definitely focused on bullish setups, and that 4-hour candle for 6 a.m. confirms it basically. That is the direction that we should be focused on that day. Now the second thing is looking at the Asian range. So on this day, the high of Asia is here, okay, and then we had the low of Asia, which was down here. And so for us to have this as a confirmation for bullish setups, two things need to happen. Either we need to fake the low and reverse, and or price just breaks above the high and takes off, right? One of those two scenarios is how you confirm that Asia is bearish, where you try to fake, like you try to break lower, but it just can't. That's a very bullish indication. And then also breaking above the high is a bullish indication. So the 10 a.m. open price happens to be above Asia. So in this situation, we can either see price stay above Asia and cross over, that's good, or we can see a scenario where, you know, price even like respects Asia and crosses over, or even if it comes all the way down here and rejects and then crosses over, that also works as well. As long as we stay above Asia, that's a confirmation that we can use. So yeah, we got to see on that. And then the VWAP is basically this thin little line that hugs price. It's kind of serves like an EMA, like a moving average, more or less. It's something that you would compare it to. So yeah, the last thing is really just looking for price to go against our direction and then back into our direction. So essentially, we want to be looking for buys at the 10 a.m. open price, but we want to see a manipulation first where price goes against our direction and then crosses back over 10 a.m. to then go for the buys. So if we get something like that, then we have a trade. If we don't, then we don't have a trade for this strategy. 10 a.m. hits and price starts to drop. It does give a little bit of a crossover here, but what I always tell people is that in our best setups, you don't want to have a small drop. We want to have a significant movement away and then a significant crossover, because if you have these small moves that happen, like look at how scrunched up price was all around here, right? So us getting this little candle, like price is still kind of all stuck in there. It's just not something reliable. Like for me, I want to see a big move away and then a big crossover. You don't have to do that necessarily every setup, but the higher probability ones that will work, and yes, that means that sometimes you will have these scenarios and you don't, enter and then you miss out on a trade, part of the game. But if we want to be very picky, we want to get a significant move away and then a good big crossover as well later. So I say that to say that some people may pull the trigger on that. Personally, I did not. This is also like 2 minutes after the 10 a.m. open as well. Like 2 minutes into that 4-hour candle is not a lot of time at all. Like literally 2 candles is nothing. Usually that manipulation above price I want to see happen like 15 minutes, 30 minutes into our window, not literally the first minute or two. I just feel like first 5 to 10 minutes not to be trusted as much as like waiting a little bit further into the window. So yeah, basically we end up getting a rejection, and then here we actually get a very big move away, right? So this is really what I'm looking for mostly, where we get a very strong push away from our direction. And so then if we do cross, I'm very convinced on that crossover to trust it more for the setup. Now, yeah, price basically comes, and then finally we get the crossover here. Okay, so again, you can see this move was like 110 points away from where 10 a.m. opened. You get what I mean? So that's what I mean by a significant move away. It's not necessarily a specific number of points, like, oh, it has to be 30 or 50 points or 100 points. It just depends on how much price has been moving that day. On certain days where price is very stuck, 30 points might look like a lot and it might seem like a significant enough move to trust. Other days we saw like, even all of this consolidation stuck price that we saw here was still an 82 point range. So if we're consolidating 80 something points, then I definitely need to see like 100 something point move to look a little bit more trustworthy. And that's basically what you see here. So yeah, big drop away and then we cross over. Okay. Now from that point, we use typically a 50-point stop loss at that 10 a.m. entry. And then we look to target a 2-to-1 risk to reward ratio. It happens to be that this liquidity high right here, this is like from 9:02 a.m. right here. That is roughly pushing a 2-to-1. So at some point, like, taking that high and everything is really where we want to focus on exiting, unless price just keeps pushing. If price keeps pushing aggressively past that, then you can keep holding. But I just want to make sure we squeeze a 2-to-1 trade as much as possible. And yeah, basically price crosses here, and then eventually we see it take that out. So again, it ran a little bit more than a 2-to-1. This is like 2.5 to 1 here, but if price is like, crossing 2-to-1 and then price starts to move back and reject that, I want to make sure that I don't let price really reverse on me too hard, and then I end up giving a bunch of profit back. So you see price kept trying to move up, and then eventually it starts to cross pretty aggressively back down. So here you see you do not want to be trying to necessarily hold that. When it was all said and done, price did end up pushing much higher. So this ended up being a trade that could have pushed like almost a 4-1. But that wasn't before a very sizable pullback. Like basically not right at entry, but like, you know, it was a pretty strong retracement close to entry that you would have had to endure there. So yeah, you know, I would say for the most part, people taking a 2-1 there, you did your job, everything's good. And yeah, this is basically what a really good Liberty X setup looks like, where you have the VWAP supporting price, you have Asia sitting below price as well. You had the manipulation and the crossover, like everything just lined up to take a good trade for Liberty X here. Okay, so that is the move. Okay, and that is for, again, for people that are looking to take like that one setup a day that has a very clear filter of confirmations and rules and things that you're looking for, and that's it. Now, in the same breath, like the entries that I was talking about earlier, you're gonna take more stop losses, but you're also gonna get more risk to reward ratios, and you're gonna be a more active trader if you do the following approach that I'm gonna show now. Okay, so this is something that again, you have to just be very, I would say like you would want to be pretty versed in what it means to like look at charts on multiple time frames, be able to like navigate quickly and understand session based liquidity like Asia, London, old highs, old lows, equal highs, equal lows. Like you got to be versed in these concepts, and you feel like you kind of know it really well, because if you try to jump into this without that background, I feel like it's going to be really overwhelming for a lot of people. And that's why I'd much rather focus on Liberty X, because again, it's like 4-step strategy. It takes a while to line up. You're only going to take a handful of trades per week. It's very chill, if that makes sense. Like a very chill strategy, and there's not a lot of pressure. You're not going to experience, you know, losing streaks as much or anything like that. But this is, again, just more aggressive, and it gives you honestly crazier trades if you can get it down pat. Now, the number one thing that you need to understand, like the back of your hand for sure, is fair value gaps. Okay, if you don't understand fair value gaps like the back of your hand, this is something that I wouldn't necessarily recommend trying to like get into, like at least with your live capital or your funded accounts, until you practice a little bit, just like anything else really. But again, I try to give more caution, because I understand that this can lead to like people over trading and trying to take every single little setup they see, and I don't want that, right? But you got to know how fair value gaps work. Okay, obviously you have bullish and you have bearish fair value gaps, and you know, for some people, like the way that you trade fair value gaps is maybe it's just a confirmation for you of like things to look for. Some people actually trade fair value gaps as like their entry models and stuff like that. So there's a lot of ways that it can be utilized. Personally, like when I trade Liberty X and all that stuff, I use it as like usually where I want to see price go to as a target. So I don't use it for entries. I use the 10 a.m. open price as a reference for my entries. And then we look at fair value gaps as reasons why maybe we need to be careful with taking certain entries, or we can use them as targets. So if we're in a trade and then there's like, let's say, a fair value gap above and we're in a buy, I know I can usually hold my trade to that fair value gap. You get what I'm saying? So yeah, there's different ways to utilize it. Now, this way that I'm going to show you guys on Akashex more deeply, I'll just like show it for a second here, is understanding the concepts of what's called an inverse fair value gap, where you basically have a fair value gap that gets invalidated, and that creates a unique opportunity to basically use that information to jump into some very like tight stop loss trades and very fast trades. So this is something I do on the 1 minute time frame. You can use it on the 5 minute as well, but anywhere from the 1 to the 5 minute, you can cycle. Sometimes it'll be a 2 minute candle, a 3 minute candle that it can look pretty clean on. Sometimes a 5 minute candle is the only thing that looks obvious. And like I said, sometimes on the 1 minute, you have those scenarios as well. So there's a couple examples I could show you where the best time to use it for me is when we literally just look at session-based liquidity getting taken and then finding setups around that. Okay. So for example, let's say that we are looking at NAS here, and this is around like 9:11 a.m. So this is a little bit before this is a little bit before 9:30, right? So the four most sensitive areas, honestly, are gonna be Asia high, Asia low, London high, London low, right? So if you have Asia high point is right here, like we talked about earlier, and then we have Asia's low point right here. Then we have the London high up here, and then you have the London low down here. Okay, so whenever price takes out those highs or lows, like for example, you can see we take the high, we get a rejection. You can see that when we came over here, we saw that London's high kind of got like wicked, and then it came back down for a while, and then it crossed back above, right? And this is the NFP move right here. This is 8:30. So you can see the 8:30 candle spike, and then it comes back down, and then it crosses back over. So all of this is the actual NFP news, okay? But the point is, all the most sensitive areas on a chart are always going to be the liquidity points. I mean, it doesn't have to necessarily be the session-based ones. Like for example, you have like this high and you have this high, and so when price took out those highs here, you saw market kind of dropped, right? So it, you know, it could be anywhere you see liquidity that gets taken and then a reversal happens. But whenever you have the session based ones, specifically like Asia and London, those are the ones that for me are like the most powerful ones to pay attention to. So the way it works is the following, right? So number one, you have to understand how fair value gaps work, okay, in general. So there's certain indicators that'll like highlight them for you and everything that you guys have seen me use, and you guys can pull them up as well. But honestly, you should be able to know what it looks like without an indicator, okay? All it is a 3 candle pattern where you have basically like, you know, a candle. So basically the 3 candle pattern I'm going to look at is this candle, and this candle. And the reason why we're looking at those 3 is because if you notice from this candle here and this candle here, the one in the middle is this big one, and it leaves that gap right there, right? So there's no selling that takes place whatsoever in here. You can see it's just a void, right? Usually balanced price action looks more like this, right? Where you have like buyers, sellers, buyers, sellers, buyers, sellers, buyers, sellers, and it's very like equal. Even if it's moving in a direction, it has its ebbs and flows. But once in a while, and especially during news, for example, you can see that you have these inefficiencies where there's only buyers in this situation and there's like no sellers, right? And so it creates this fair value gap, okay? Now, typically with a fair value gap, you can use it again many different ways. You can either, you know, let's say for whatever reason you take a sell here, and this might be where you exit your trade because you know that price could reject from this area, and so you can take profit in that fair value gap. Other people like to look at that as an entry for buys because you're like, oh, the market's going up, we're going to let it retrace to that fair value gap to look for buys and then take a buy. So some people will do it like that, right? Now, the concept of inverse fair value gaps is very simple. All it is that you're seeing a fair value gap form and then it gets invalidated, meaning that in general, if the market is moving higher and it comes back into a fair value gap a little bit lower, it's supposed to bounce and go higher. But what will happen sometimes is that it will, like, let's say bounce temporarily and then it'll break through it, okay? And so that fair value gap now gets invalidated, and that creates an opportunity for you to basically short the market or sell once you see that that fair value gap has failed. So what that would look like essentially in, let's say, this situation is you would see this 1 minute fair value gap here, and I mean, you can even argue like there's this one here as well, a little bit higher, like this fair value gap, but price already did tap into it here, and then it kind of took off. So I don't personally like it when it taps into it and then comes back into it. I'd rather see the one that hasn't really been, you know, um, like interacted by price with yet. So this one you can see we haven't touched anything here yet. And I want to be looking for sells in the market here, right? And then we want to basically have our stop losses covering that fair value gap. So maybe something like a 30-point stop in this situation. So there's going to be a lot of situations where this is actually tighter than 30 points. But this one just happens to be a pretty wide fair value gap. So that's why we use 30 points here. So basically you're jumping into the trade where the gap gets invalidated here and you have your stops above the gap where it was created on the high side. So this is basically an example where price, again, we see it interact a little bit and then boom, we break through here, right? So this is like literally, that's like literally your entry right there. Okay, you can see price comes into the fair value gap, tries to react, fails, breaks through the gap, and now you sell. Okay. And yeah, you're looking for obviously areas of liquidity as targets, and then if you can get a 2-to-1 plus setup like I usually try to get to anyways, that's also good. But you got to be careful when you start taking lows and stuff like that here to see how price reacts to at least go break even or whatnot. So these, for example, are like some lows that are liquidity points that you'd want to pay attention to. Now, obviously, you also have London low down here. So that is a potential area where you can look to hold that trade as well. And that pushes 3 to, like a 3-to-1 setup. But I've always done like my risk management stuff where I'm trying to make sure I can secure at least 2-to-1 trades as much as possible, right? So price goes, drops, and we take out that low and we just run through that low as well. And then we run straight through. So you can see 2-to-1 gets hit and like simultaneously in the same candle. So let me show you what I mean by that. Why is this not? Oh, here we go. So simultaneously in the same candle that hits 2-to-1 here, you can see that it still also is pushing towards the London low. So there's no reason to really exit unless you really just like that you're pushing 3-to-1. But at that point, I would expect London low to get hit, and that pushes a 3-to-1 trade. Okay, and so boom, you have that right there. So I want you to pay attention again. Basically, you want to see some type of session-based liquidity get taken. Okay, so you can see London's high right here gets invalidated when we push through it and we start coming back below it. We also see that 1 minute fair value gap created through news. We want to see that get invalidated, right? So price breaks through it, and that's where you enter. You put your stops above where the fair value gap started, and then you target, liquidity targets here, and then you have London low. And so this is a 3-to-1 setup before the bell. Like it starts before the bell, and then the bell kind of finishes the job. So 9:30 is right here, right? And that's the candle that basically shot down right there. So that's one setup already during New York session that's super clean using this. Okay. I'll show you the one that I personally took from the screenshot that you just saw. But here's another situation, right, where you have London's low, right? So this is the low of London right here. And let's say you're like, okay, well, if I see some type of bullish or bearish fair value gap get invalidated, I'll look for buys, right? So you got to start looking at all of the different, 1 minute bearish fair value gaps that you can find. So for example, you have this one right here, okay? So this is an example of one that you would be looking at. And again, what you would want to see is price takes out some type of liquidity, which we have the London low right here. And if it starts to break and close above that bearish fair value gap, you take entries there and you make sure your stops cover the low of that fair value gap. So let's see. Hypothetically, if we take this setup here, your entry would be here. And then this is a 30-point stop loss again here. If you try to reduce that to like 20, you could. I still think 30 points is relatively decent there because it gives at least a little bit of a cushion below that gap, right? And we gotta see because maybe some other gap forms lower, and then that kind of changes our idea. But as of right now, you can see we take out London's low and we're starting to reject. So this is a potential setup that starts loading up here. And so yeah, let's see what happens here. Okay, so you see price starting to break through that gap right there, right? So that's kind of your sign there. Now you can see there's different things you can look to target here. This is a 2-to-1 risk to reward ratio when we get to this high point right here. Okay, and then you have like this fair value gap, for example, that was left over here. That's a little bit above that you could use as a potential like extra area that price might want to get to. Yeah, it just depends. But I mean, it's basically right around a 2-to-1 anyway. So as long as you can get a 2-to-1, that's good. And so boom, right there, you can already see the price kind of moving. So again, the main component of it is you want to see some type of session-based liquidity like this get hit, and you see a rejection. And that first 1 minute fair value gap that gets invalidated is where you enter. Okay. And then yeah, you try to target a 2-to-1 plus. And pretty swiftly it does it. So like here's the thing what I'm telling you of like why you have to be very fast is because like this candle here this one right here is where that trade starts to like activate, right? And so if I want to send this as a trade alert, for example, it's gonna be pretty damn hard for me to do that consistently. I'm not gonna lie to y'all. I'll try, but it's really like, imagine I'm trying to trade my own accounts, right? And I'm seeing this happen in real time. Like this is like a literally like 2-minute decision of price crossing, and like if you don't take that candle like right then and there, you're gonna miss the trade. So like you have to be very quick on your toes to take this stuff, and it's easy, but it's easy for people that like know how to trade, if that makes sense. If you're like super brand new to trading, it's gonna feel a little bit like pressure because you gotta be very fast. You get what I'm saying? Liberty X, man, you had like, it was like almost a whole hour of you prepping for that price to cross the line and whatever. But the difference with this is that even though it is faster, like that you have to be more on your toes and all that stuff, the benefit is if you are ready for it, is that you hit TP in 2 minutes. So basically this is 1 minute, this is 2 minutes, and like maybe 10 seconds into that third candle, you hit a 2-to-1, right? So like you can literally hit TP in minutes with this stuff, and it almost pushes 3-to-1. I think it rejects from there though, but yeah, long story short, you know, that's how this trading goes. So liquidity sweep of a major sensitive spot. I mean, it doesn't have to be session based, but I like session based as my highest probability because we know that those are the most sensitive areas on a chart. You saw it with this fair value gap getting validated for shorts. You saw it sweep the low of London and invalidate this 1 minute fair value gap to take us up to this fair value gap. So it's very accurate, and it kind of shows you the beauty of like understanding smart money concepts with that, you know, fair value gaps, liquidity sweeps, and all that stuff about why the market does what it does in like hyper motion here. But these aren't even the setups that I took. I'm gonna show you the one that I ended up taking, which was the one that we swept Asia. So 10 a.m. hits, like we mentioned, this is the 10 a.m. window now, right? And price ends up coming lower, and then we take out Asia's low. So we're gonna focus on the Asia low here now. So same thing that we did with the London setup earlier. The only difference is now this is the Asia low. Okay, you can see Asia low, price sweeps that. Okay, and the idea is if we sweep some type of major liquidity area, especially if it's session based, we just want to locate that, you know, first 1 minute fair value gap that stands out to us. Now again, it could be a 3 minute, it could be a 5 minute, like you can cycle between time frames. But if you go to 1 minute, obviously you can kind of get the jump on price early and find a good setup. Now personally, my exact entry, I actually like I don't remember if I hesitated or if the candle just moved so fast that I tried entering it and it entered me like a little bit after. So my entry, I'll show you where the actual entry was, but I want to show you like where it should have been basically. So this is the 1 minute fair value gap that is here, the bearish fair value gap. And so again, we take out a liquidity area from a session. So this is Asia's low. This is the first 1 minute fair value gap. So all we needed to do is for it to break and close above that gap. And then we look for buy opportunities there. Now the crazy thing is like the targets that we have for this are going to be liquidity based, right? So there's a couple things, like you have this fair value gap that's also lying a little bit above that could be a little bit of an obstacle for this trade because it could always react off of this and come back down. So we do have to pay attention to like this area as a potential target, but ideally I like to really look at the opposite side liquidity, which is like all these highs up here, for example. So like my real TPs, like for example, if we long from here, and then also the stop loss also happens to be that like 30 I felt pretty comfortable with, but in reality, if we kind of take it back here, you know, even a 20-point stop loss here is more than enough. Like it gives you enough cushion below that fair value gap right there. Okay. But let's say for the sake of the argument that you just stuck to 30 there for whatever reason, I think you can definitely pull off getting a lot more like 20-point stop losses, you know? Like this is not going to be 50-point stop losses. This is going to be like between, on the low end, like 10 points minimum. But I'm not that aggressive. I personally think anywhere from like 15 to 30 points is more than enough on average. And it should still give you like pretty good risk to rewards. So after markups drop to 1 minute candle, yeah, like this is something I do on a 1 minute chart, you know, like I'm trying to look at the session liquidity. So either London low, Asia high, London high. And if we're nowhere near any of those points, then I just need to see what type of liquidity is available. Like, you know, it could have been maybe taking out this low, you know what I'm saying? Like, you have these lows down here, maybe price sweeps that low and creates like some type of fair value gap there, and then we're taking buys off of here. And that's not necessarily Asia or London, it's just like a liquidity point from this old low. So it doesn't have to be session based, but session based I feel like the most comfortable with because I know it's sensitive. So yeah, long story short, that's the first that is the first 1 minute bearish fair value gap that exists, and we just want to see price inverse that. Okay, and so yeah, we take out the low, and now we want to see it cross. So okay, this is exactly what happened. So as it crossed like that, I didn't have like a pending order or anything that allowed me to enter here. Like this candle literally like shot up like quick, and so my entry ended up being up here. Like as that candle pushed like that, that's where I entered. And so again, it wasn't technically like the ideal entry. Like I want to enter here as it crosses, right? So I did kind of lose some points there for that, but whatever. I kept the 30-point stop. I already know that even with that 30 points, it's enough room below that fair value gap to still like hold if it's gonna work. The last little thing was just to see like, you know, how price reacts to this, you know, because if price starts reacting to this fair value gap and coming back down very aggressively, then that's my cue that I might need to exit that trade and just go break even or something. But really the first liquidity target is these highs up here, you know, because that's again the first liquidity area that we see, you know, from the opposite side. And then after that would be like this high, for example. So these are the two like targets if we're targeting opposite side liquidity that makes sense. Yeah, and then a 2-to-1 is right here. This is a 2-to-1, and that's really like my baseline of where I'm trying to get into. And so yeah, price basically goes, gives a good reaction, and then literally just blows through it. So like this obstacle that I thought might be an issue here, not an issue at all. Like literally price just runs through it, and you can see already you have a 30-point stop loss. You're getting a 2-to-1 target in 2 minutes. So 2 minutes, about 60 points. And then eventually price smacks through that TP. And again, that was this entry here. Here. Okay, so yeah, basically that was it. It ends up running for honestly a pretty crazy RR because it does end up sweeping all of this, as we see. And then it actually ends up taking out this high. And so this trade ends up being like a monster trade. Like this starts pushing like 7-to-1. And then even all the way up here where price ended up, it went like 10, like a 10R trade to the end of the day. I didn't stay in that long because like once we started taking out all of these highs that were here, I exited the trade. Not mad about it, honestly, especially after taking out this high, because you don't know when this retracement starts happening, like how far price can go. But it is much quicker and a little bit easier to hit like 3R, 4R plus trades when you're trading like this, because your entries are like at levels that you know you're gonna lose or you're gonna win really, really fast. And as long as you're quick to the trigger and everything like that, you can find some pretty crazy trades. So yeah, I think this trade ends up literally pushing like almost 10R, something like that. So yeah, this is something I definitely am, you know, very excited to kind of like introduce to everybody in Akashex, where you could have trades like this. I mean, even honestly, I would say really it's like this. You didn't really know if it was gonna go all the way up here, but at least here where you're getting like 5R trades and stuff like that, this is definitely very doable with this. And again, that was just some examples. I mean, again, even if you did Liberty X, you could have still taken that 10 a.m. entry right here. You can still see like there's good trades to be taken in the same day with the same kind of direction, but with different criteria. Yeah, and there was some reentry opportunities that I was showing the chat like later on in the day, where like for example, when we were here, you know, I was like, all right, well, there's reentry opportunities here where you have like a 5-minute one, right? So the 1 minute are gonna be very fast, and you're gonna see them a lot, you know, like you're gonna see them play out a lot quicker. The 5-minute one does take a little bit, you know, longer, obviously, but it gives you more time to prepare for them as well. So, you know, we're seeing that price is pushing bullish, making new highs. My whole bias was to get up to these highs anyway, so I still had room in my mind to go higher. So if price, you know, starts to make this drop and then we invalidate this bearish fair value gap, that can, you know, create buy opportunities for us to look at as well. In this scenario, obviously a 5-minute one is going to be a little bit of a wider range. I think this was like 50 points. Yeah, so that's a 50-point stop loss there, covering that gap. And yeah, price we start to see kind of comes up, and then it starts activating right there, and price just kind of breaks through it and eventually rips through a 2-to-1 as well. So like this is something that works very, very well, and it can be done on 5-minute, it could be done on 1 minute. And again, you're gonna say, oh well, this doesn't sweep any session liquidity, and 100%. That's why I don't say that this is the best example out of all of them, because it doesn't do that specific thing. Like when it sweeps some type of liquidity and has a recovery, like reversal pattern, that's where you can find like the hardest hitting ones that have like the best risk to rewards and all that. This is more like a continuation trade, but still, you know, you can see the concept of inversing a fair value gap, and in the right conditions, it can, you know, be very powerful. So, yeah, that's what I'm gonna be introducing more. You know, alongside Liberty X. So it's not about changing anything. It's just about giving people alternatives depending on their trading style. You know what I mean? So when I do like my live sessions, for example, we're trying to be more mindful of like these inverse gaps and maybe trying to utilize that to take some opportunities when we're going live. But we won't be discarding the Liberty X stuff. You know, we'll still be looking for that. But you know, whenever we have those days where maybe Liberty X setups aren't gonna be present that day because you know the market's just not gonna do it, maybe we can still use this other models to find opportunities or whatever. And honestly, because we're trading in a scalping approach, my risk does drop like in half of what I would usually do with like Liberty X because you know with Liberty X I know I'm only taking 3 to 5 setups a week, so my risk plan for that is going to be way like higher lots or more contracts per trade because I know I don't have a lot of shot at the market. I don't have a lot of shots at the market with that. With what I just showed you, we saw literally like 3 to 4 examples in a day that were all pretty solid. So if you're doing like, I mean, I wouldn't take necessarily 4 setups a day, but it gives you more opportunities to strike if you know started trading earlier in the day, later in the day, you know. So I still look for a one and done approach if I hit a really good trade. You get me? Like if I hit a 2 to 3 yard plus trade, I don't need to be looking for a second opportunity. But sometimes I might not have a Liberty X trade and then I can find one of those and then, you know, hit a trade off of that. And if I lose one, I can always get into another one. But again, tighter stops means higher risk to reward, which means I could afford to lower my risk. Obviously, if I use the same risk that I would with Liberty X setups, I have a higher chance of blowing up my funded account, like losing the challenge or the eval account. But what I'm hitting is gonna pass my eval in like 2-3 days. It's gonna get me like a bigger payout much faster when you scalp and you do this approach. So that's why I say like you can afford to drop the risk like in half because we have more frequency of trades coming in. So yeah, that's a little bit of that. So it's gonna be interesting. Obviously, I know I just kind of rapid fired that to a lot of people that may never seen that before or even thought about that before, or maybe you've heard of this but like never really like attempted to do it. It is very powerful. You just gotta, again, I would say like just be ready to trade that fast if you're gonna do that route. But yeah, other than that, how do I show y'all this? Here. So they gotta fix the flyer because I got my name wrong. But let's just say that we're gonna have some really cool calls that we're gonna be rolling out. I think it's gonna be on Tuesdays. So 10 p.m. Eastern on Tuesday. It looks like me and some of the education team, some of the best in the game, we're gonna have some really different type of calls rolling out for early 2026. So I didn't show y'all that. Y'all are gonna hear about it soon. But it's gonna be really cool. So we'll see. And this, by the way, you could technically use this 1 minute stuff that I just showed you on other sessions as well. Like you could even use it during Asia, London. You just gotta be mindful that New York session is always gonna bring the majority of the best volume and the best volatility. So I would still say to prioritize trading New York, to be quite honest with you. But you will find certain opportunities to use this stuff that I just showed you on like Asian session, London session as well. But yeah, other than that, we're gonna get up out of here. Get up out of here. It's been like about an hour. And yeah, like I said, I invite price to come lower right now, but overall, I still think that the main objective will be to get to these highs. So let's see how that goes. I know there's like a lot of high impact news events that are also happening this week, and then we also have a lot of world news going on as well with like, you know, the whole Venezuela thing, and then Greenland, and there's just a whole lot going on in the world as always. So that's stuff to pay attention to. But that's gonna really, I think, affect more like commodities like gold, like all this like, you know, things with war and countries and all that stuff usually that kind of opens the floodgates for money to get thrown into commodities like gold. So people that are trading gold are going to have a very, very busy start to the year. That I will say. Us, we just have our typical 8:30 a.m. Eastern, pre-market news on Tuesday, Wednesday, and Thursday. So we'll keep an eye out on that. But yeah, guys. Other than that, I think we're good to go here. I will see you guys on the sessions this week. If you are in Akashex, Monday is Spanish, Tuesday, Wednesday, Thursday is English. And if you guys are not a part of Akashex, I will see you guys next week. But I do recommend that y'all get with the program. You guys can find links in the description if you guys want to get in contact with me if you're not a part of Akashex to get started, and some other things I can maybe serve you if you are a trader looking to get better. So just check out the links. We have a lot of cool promos as well on prop firms like TradeX and whatnot that you guys might want to take advantage of for funding. So that's my final messages to y'all. All right, I'm going to get up out of here. Hope you have an amazing rest of your Sunday night. Let's crush it this week. And I will see y'all on the lives. All right, appreciate y'all.